Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So world markets drift lower, and our futures point to a lower open this morning as the sentiment that we're lost in translation since the Fed's decision not to taper continues. So Scott, what would you say the sentiment as a trader, how confusing is this environment?
It's a bit confusing because a lot of people came into last week, they thought they would reduce the pace of purchase by 10 billion. So going there, everyone was pretty set with the market composure. We were moving higher, maybe we would break out, hold in there, continue, maybe rates would continue to be higher. Good news could be good news. Gold that was weaker, perhaps it would stay weak, and then all of a sudden they did nothing, and people just got their trades blown out. If they were short, they probably covered. If they weren't long, they might have added. If they were short gold, they might have got squeezed out and then flipped long when Goldman flipped, and then now we're lower. So lots of things happened very quickly where I think traders on both sides of the market lost money. So when that happens, I think everyone pulls back, and that's why you're seeing a lack of interest and a lack of translation in what's going on here in the tape, because people don't know whether good news is good news, if we want bad news, if this dip is viable, and where we're at after a huge 2013.
Well, with that being said, then we have to kind of go back to basics, right? You have to go back to your tactics and everything that we're taught.
Back to basics, just like Rocky and Rocky 3. It went back to where you started with minimal tactics, low gross, low net, and I just went with the Rocky comparison. But anyway, with that being said, you go to the chart and you could see that here is a trend. Okay, so let's go back to the trends. Here's your macro trend that's been intact all throughout 2013. Tested it here around the 100-day, tested it here in August, okay? But what led to these declines was one, a breakout failure here that happened in a day, so that's why we take notice when that happens. And then here, a small breakout failure that led to this, head and shoulders pattern that gave us a decline. So right here, when you have another one, people are like, oh, are we gonna go down and test this trend line again, or are we gonna hold higher? So right now, you figure it out on a, I would say, day-to-day basis. And here we are, use yesterday's low of 1694 as an area. Yesterday we had this as 1697 and it tried. Maybe it happens today. Maybe we go through the low, touch the 21-day, come back up, and that could be your pivot low or at least your tactical low. So that's the way I'm doing. I'm trying to keep it simple, and I'm going to try and see what could take place, in that type of arena for, the S&P and the spiders.
Well, we like to look at the financials for clues about market direction. We are still seeing weakness in that group. So what does that say to you?
It's just saying that, like yesterday when the market tried to bounce, once you saw the financials heavy, be skeptical, adding on strength. Maybe buy weakness first levels, but not add on strength. But, you look at this group, and anytime the financials, don't help lead and become a headwind, like look at this, the financials did not make a new high, when you go to the spiders, where the spiders made, a new high going into the end of, in September here. So that showed you all of a sudden that financials were weaker. Take notice. And now here we are, coming in still above the trend line, at the 100-day already, where the market's only at the 21-day, not even. So you don't know. So here you go. 1999 is yesterday's low. If you get some type of red dog reversal in the XLF, and then here's a trend line that comes in right around 1975. And I think you really have to keep an eye on JP Morgan. JP Morgan's been really weak. A lot of people are talking about it. Lots of different spots to get rid of it if you were riding it. And now the question is, will it get followed through weakness to the downside, which would not be good for the market. So watch this level here. Watch 50-30. Maybe it trades below it. That causes market weakness, comes back above it. And then, that's what you look at. I think they're talking about some kind of settlement, $3 billion to $7 billion on some things that they've done in the past. Anything below 4, I think it rallies.
All right. Well, yesterday, high beta tech led the market up in the morning. They did fade into the close. We've got Apple continuing to try to digest the recent gains after announcing that record weekend of iPhone sales. Does it look like it'll be able to hang in there?
It's trying. And, today it's down a little bit. I'm going to look at that to see if you can go negative to positive. Lately, it's had so many gaps and such poor intraday action that people are kind of fed up with it. But if you're positioned into it, you're doing fine. And overall, if you look at the pattern and take yourself out of the intraday trade, it still looks okay. Here's that whole lower level that built, an accumulation phase. And then this is when it gapped up after earnings and then took off. Remember when it failed here, it failed, into this area, and then that was your decline to retest, the moving averages, and now it's holding higher. So for a trader like me, I'm going to stay with it as long as it stays pent up. I didn't come in long today. I'd probably go for a move negative to positive if I see a divergence. It needs to stay above 482.60 to stay relevant, to stay in the game for potentially a move through this trend line. So, trade it versus 480, 82. You even have yesterday's low of 487 as a point of reference. And then if for some reason it starts to get momentum, perhaps, it takes out 496 on its way above 500. So this is on my A list today.
All right, and we had LinkedIn yesterday managed to hold about half of its intraday gains and posted a 2.6% gain. What would you say the key levels it needs to hold?
Well, this, it's been just, I would say, in a somewhat of a corrective phase, and everyone gets all up in arms about LinkedIn. But meanwhile, you look at the chart here, and it's had a huge move. Yesterday, with the Facebook news, it was up like $8, $9 and then faded. I don't see anything clear cut here. It's not really tight. But, some guys went long versus this, versus tail here. And I just think it's going to need some time before it thinks about making new highs again. So overall, just keep it on the radar. And as the market finds its footing, if we are to rally, this one should provide some leadership. So when it crosses 250, perhaps that's where the momentum comes in.
All right. What about Baidu? Put in a new high yesterday of 154.72. It did give back most of its gains, though, for the day.
Well, it just shows you, again, you couldn't buy strength in the indices. You couldn't do it in any of the leaders, but there was a nice trade there. Guys that saw the relative weakness in the morning, once we turned, it gave you a cute trade. But just like, a lot of times recently, you have to take it versus add to it. And you look at the chart here, still shows leadership. Here was that gap that never got filled. There was a nice trade right around here, and then it tried to break out. But when the market's not ready to find its footing, they're not letting stocks keep that momentum. But overall, above the 8-day, 21-day, still looks intact, just not a clear-cut setup there right now.
And Amazon has been facing nicely above its 8-day, held in well yesterday, and managed to post small gains, almost 1%. What would you say it needs to hold here to keep momentum?
This time around, this is acting better than something like a Google that moved together and made new highs. It does move quickly, so you have to have a thick stomach to, trade Amazon. You look here. Remember when it broke out? Let's just take a close look at this chart here. It broke out, this was clean before earnings, and then after earnings got a little wishy-washy, broke this area, and then became clean again. Here's your descending trend line, bull flag. I remember talking about 302. I think we had it on the price point sheet, and now it's trying to hold again. So overall, this should be one of your go-to stocks. When the market does turn, this looks like it's holding in pretty darn strong, and the next level will be if it can take out 320. And if you're a macro investor in this stock, my goodness, you've been very rewarded for going against all the valuation naysayers out there. Congratulations.
We like having those go-to stocks to turn to. How about Netflix? Did have that sharp pullback on Monday, but then found footing yesterday, gained 1.5%.
I would say it found some footing. I wouldn't say that it's out of the woods with trouble yet. That gap open failure, that potent bar is still there. And let's take a look. It did bounce off support. It is holding right here. It's holding this, 298 to 300. This was your gap up failure, okay, and it couldn't take back more than half. So it's still, in the game that some people were trying to short it. I think shorting Netflix is really hard. I like to buy it, but usually I like to buy it when it's tight, like right there, or tight when it's right here. So up here, it's getting a little wishy-washy. So with that being said, just watch it close. If it starts to fade a little bit, there will be some guys that try and short it below 300. And if that's you, just be careful. If it goes and stays sideways here, I don't see why it can't continue higher, but it is getting frothy there on Netflix.
All right, Tesla, we still have hovering near highs, but this is a momentum name that we have to see if it can actually keep up momentum.
Right, and it has. Okay, it's got strong trends, strong price action. It's holding the 8-day. It's giving you clean breakouts. Last breakout we had in this stock was last week above 174, then a nice trade above 180 on Friday. You look at it right now, nothing seems different yet. Here's a very strong trend that it's been in. Every time that it's gotten tight, like here it broke out, like here it broke out, all the way up. This was the most recent, and now it's building another flag. So it's above the 8-day. If the market stays the way it is and even comes in and it stays above the 8-day again, I'm sure we'll get another trade above 185.50. That could be very rewarding for quick and active traders.
All right, coming up, we're going in the trenches with the home builders, which got a lift yesterday on good news from Lennar and KB Homes. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're going in the trenches with the home builders, which had decent news yesterday. Lennar and KB Home putting up better than expected quarterly results, even in the face of higher rates. So what do you say? Let's take a look at the XHB first.
Yes, and this group was weaker a month ago, started to get some traction, okay, and it's good to see that some of these companies are saying that, yes, you know, it wasn't blast off time, but they didn't get too hurt with rates rising. So you look at the XHB, which people like to see strengthen. Here's where it held big support at 28 after, you know, a very sizable move, so why not have some digestion? Broke above this downtrend, and now it's got to hold above 30. If it stays above 30, I think that'll help keep a bid in the market.
We also have Toll Brothers with nice overnight gains. It finished the day up more than 2%.
Yes, you know, the whole thing is traders hate when things close off their highs, and those two stocks blasted off, but they're still okay. You look at the chart here of Toll Brothers, and you'll see, look at the size of this move we've had. Okay, and then it did peak out here when it tried to break out and failed. And that's why traders hate breakout failures, because look what happened there. Okay, it broke out and then couldn't hold it. So that was right there. Anyway, here it is. You know, back at this area, I'm trying to get you a little closer so you could see it. There it is. At this point, you know, it really, to me, has to hold above this 32 in order to stay in the game, to keep momentum there for a potential move above 35. It needs time, and let's give it some time. But overall, you know, it's been a very choppy area in these home builders lately because people don't know which way, you know, to trust them.
Right. And we have Lennar, of course, too. And I read a lot of reports that Lennar's results would be very telling for the home builders market. And with it, if you take a look at the stock gaining more than 4%, investors definitely liked it, the news.
They did, but again, it closed off the highs, and it's off well off the prior, you know, few week ago highs. And you look at it, it's still choppy. You know, this stock too. A lot of these home builder stocks, you just look at the size of these moves. So even on good news, they're trying to sell it down. So here is this descending channel here that it broke above, came back and retested it. Take a closer look here. You know, for me, I think you don't really need to go with the individual names. Go with the overall indice, because there's so much, you know, noise in these individual names. But anyway, you know, at this point, it's got to stay above 34. It stays above 34. I think it's in the game for a potential move back towards these highs here, especially if rates start, you know, continue to stay low, which, you know, they start to move back lower ever since the Fed did nothing.
All right, let's do some quick hits here and talk Las Vegas Sands, which had a 2% gain yesterday. Obviously, that showed some relative strength yesterday, and it closed on highs. So do you expect more upside momentum today?
It definitely needs to be on every trader's list. We talked about this 3 weeks ago when the group was acting better in August, when it was holding higher. And you look here, let me just show you guys something. You know, in August, look what happened here. In August, while the market pulled in, okay, 3-4%, this stayed very tight. That's what showed you relative strength, and that gave you clues it was going to break out. And it broke out above 57, had a move. I actually tried shorting it in here. It couldn't go lower. That gave you clues it's going to continue. And now with the down tape, maybe you buy it on the red, sell it in the green, and it's continuing higher. Stay with this group. MGM, if you have it in the drawer, it's above 20. Wind continues to look good. You know, this group, you know, put it on the radar and keep it there for tactical cash flow and maybe even more.
All right, how about Facebook making another new high yesterday? 2 more upgrades today. This stock has clearly come a long way. What do you think about levels here?
For me, unfortunately, I sold it before the China news, but who cares? You don't go pour booking gains, and then to me, I thought it was extended before yesterday. You know, the funny thing though with wirehouses is when the things are the strongest and things get extended, that's when they start upgrading it. They got to start doing the opposite. But anyway, you know, you look at the chart. We've had lots of tactical areas to buy. This was the gap up after earnings. If you know, this was a spot to buy. This was your spot to buy when it cleared this prior level. Here was a really good spot. Here was another good spot. So up here, I'm not that excited about it. Some might even take this upgrade if it starts to go red for a cute short below 48.18 for a potential gap fill to the 8-day, but this 8-day moving average besides this day has been your roadmap. I'd rather see you buy it on the 8-day or on a breakout. And if it stays above this gap and digests for a few days, I guess it could continue because the liquidity's here, the volume's here, and they do have a lot of room for mobile growth, which is what's exciting the street.
Right. How about gold miners dropped another 0.3% yesterday to mark the 4th down day. Where's next support?
I just think this is an important lesson, because after last week, everyone's like, oh, we're going to have a new blaring, bull market in gold. And the miners said no. The miners said, And if you look at what could start a new move, what could start a new move typically is an igniting bar. Okay, but then when you measure the commitment to it, it gave away half on that Thursday, and then that just turned into no raging bull market there. And now it's trying to hover a little bit. Some guys caught a cute little trade here and this, or a nugget, whatever it was. But ultimately, this trend is down. This trend is weak, and I would not trust it and put any big size behind it.
And the TBTs, we've been talking about the weakness in this ETF. It plunged another 2% yesterday, but I know you believe the theme of rising rates for 2013 remains intact. So where would this be viable?
I also believe in the theme of entries and exits matter. When the Fed spoke, we said if they change something, the trade could change. It's just not as quick and not as furious. And if you look here for the TBTs, that was right around here. It was nice and tight. What happened? It broke below. The Fed did nothing. If you weren't committed to this for the long term, that was your way out. Then we talked about this trend line here with the 50-day. Didn't hold that either. So if you got out of the way, which there were many signs to do so, I still think that we said 3% coming to a theater near you in 2014. The street is the one that forced it sooner. But anyway, this area I do feel will be more buyable than sellable for those looking to put it in the drawer for a potential move higher next year.
Well, as we continue to navigate this uncertain road, what will be your strategy heading into the trading session?
Low gross, low net. Okay, a lot of smart guys out there that have been through a lot of environments. When you don't know exactly what's going on, you don't put big size on. You don't lose money because you're frustrated and bored. So with that being said, I'll use my tactical red dog reversal if we happen to trade below yesterday's lows and come into the 21-day, just stay on the spiders and come back above yesterday's low. I'll do the same thing I did yesterday. I'll put some on with a stop. As it rallies into some resistance, I'll take some off, and then I'll see what's going on around me. I'll see if the financials get a little bit better. I'll see if the home builders hold in there. I'll check out the landscape on whether high beta is in play or if they're hitting it. So I'll put that all together and try and put together a day. Not looking for a home run. I'm looking for a single or maybe even a double. We'll see how the day unfolds.
All right, and that's your morning call. Happy trading. Have a great day.